Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, March 30th, 2025. Hope you guys are having a fantastic weekend, and let's get started. So, I had said on Thursday that the Bulls were kind of playing with fire, meaning that they needed to really pull themselves outside of the panic zone that I was looking at. And even though we're in a bullish time period until the 8th, time isn't going to make us money. It's going to be price, and price was getting dragged lower. So, I removed my say bullish stands. I'm still was leaning that way, but I said the Bulls are going to have to prove it, and obviously on Friday they did not. We had some worse than expected inflation numbers, and that just absolutely crushed the market. So the Bulls are now really what I'm going to say. This was the panic line that I said that was the 5600. So when they went through that, they took out this pivot, and this is really the last line in the sand right here, the 78% retracement. And that's really from this low to this high. Now, one other thing we could look at would be actually, let me go back to this chart. It could be that we're going to possibly look to close the gap here. But as I said, if they're going to close this gap, we're going all the way down into this right here. So we're talking about 5523. The low is 5500. So if we get down there, I don't believe we're going to hold. I think we're going to keep going down. But right now, this we have these are to say the support lines that I'm watching, and if it could be, instead of being a bullish time period like I was anticipating, we may just be setting up a big range, and meaning that instead of breaking out, we're really going to just expand this range and then which would not be good for the Bulls, because basically what's going to be happening is we're consolidating at the lows, and what that's going to do is open the door for that move down to the 5400, possibly even 5100. So natural support, we didn't really hit it on Friday, but we came pretty close. Um, the gap here, the top of it, or let's say the bottom, that's right at the 5564. Now, if they lose that, we could say that this is support right here, 5550, but really the gap fill would be all the way down at the 5520. So those are the support areas that we want to see. You can see we do have some bullish divergences on the 15-minute chart, but we don't have any on the 60-minute chart right here. So what it's telling me is, if the 15 minutes are going to cause a bounce, really what I would be looking at, you can see, where did I put it? It's on this one. So what I basically did with this is just a 5-minute chart, because I want to look at where, say, natural resistance is. And what I basically did is took fib lines from this top to this low, and then I took it from this top to this low, because it's really could be like an ABC move. So what we're looking at is right here is the cluster right at the 50%, and that's from this high to this low, that's 50%, and then from this high to this low is 38%. So this is our fib cluster. So, and you can also see it's also matching up with the 200-day moving average. So if we do get the bounce, this is really going to be the line in the sand for, say, the Bulls and the Bears. I say the short-term bull bear line, where they're going to battle it out. And that's right around that 56.52, which is about, almost 70 points higher. So if we get that kind of, and let's say they get above this, then what we're going to just look at is the other Fibry clusters. So that's going to be at the 5696, and then up at the 5700. So these are really the two areas that I would be watching if we get a bounce, because as I said, the Bulls really had to, they had to step in on Friday, and they did not do that. So this is, say, the resistance zone right here, and that's going to be between the 5652 up to the 5690. If we come down, then really what we're going to be looking at is the support at the 5563, and then down at the 5550. So this is our support zone right here, and really, if they if they break through it, then what we're looking at is that move that's going to come all the way down and close this gap. But at this point, I think the bulls have just lost total control, and we're going to take out these lows. Now, if we do take out those lows, here you can see the fit. So the hourly chart, we don't have any bullish divergences. So what would make sense is we actually do get that bounce back up to somewhere at the 56.50, somewhere in that range there, and then come down and then take out these lows and maybe close the gap. That would make sense, because what will happen is this will then give us some bullish divergences. And as I was saying, what we really could be looking at is just this really big range here, and it's going to range, anywhere from say the 55.26 up to the 57.84, and we may just bounce up and down on that area. But as I said, this really wouldn't be bullish, because if we take a look at the chart, and what we're going to see is that this is consolidation at the bottom here. So this is just a bear flag, and when we break it, that's when we're going to really be looking at that move coming down to the 5,400, or possibly even lower than that. So right now we just kind of have to wait to see on Monday. As I said, the no divergences on the 60s, but the divergences on the 15s is suggesting that we are going to get some kind of reflex bounce on Monday. And really, what we want to do is just keep an eye on, see how resistance reacts. Because if the sellers step in, then we want to just kind of move over to the shorting rallies. But right now, I'm leaving the door open, just to see if the bulls may be able to make some kind of run, tomorrow, and distance themselves from this panic area. So if what I want to show you now is hang on one. Okay, so here's our fear charts here. So the VIX, you can see it had a really nice run up on Friday. It was up almost 15%. So this is remember the panic line? I actually had it from here to here, but being we broke through that and we're already through it, I'm moving the panic line. This was the semi panic line. So this is the panic line that's going from right around that 23 up to the 29, where we hit. In this area, like I said, if it breaks above this, then we're coming into this, and honestly, a lot of people will look at it as bearish, but me, I'm looking at it as bullish, and where you want to be buying, because it's a saying that when everybody's selling, you want to be buying, and when everybody's buying, you want to be selling. So you got to be very, cautious with your entries. You don't want to go all in, because, if we do see another 5, 6, 700 point chop in the S&P, you're not going to really want to ride that. But what you do is just start building it up. So if we see the VIX get somewhere back up into this area, maybe start dabbling in some of the quantum stocks, or long-term leaps or something in the S&P, and then just keep building it up as we get up. Because typically when we get these kind of moves like this, it actually triggers a very nice rally, and a lot of times, just not every time, it's made it to new all-time highs. So if we see that, to spike up, I'm looking at it more as an opportunity to buy, not sell. But right now, we just want to keep an eye on what's going to happen short term. So the next chart is the one that I show all the time. This is our put call ratio, and you can see this is that box where I've been saying, I do not believe the low is in until we start seeing the put call ratio up here, where everybody's just giving up on calls and buying puts, and that will probably coincide with the VIX trading near that 30 area, and that will be the buying opportunity. And it may not come until the end of April, early May. But what can happen is during that time period, we just see big chops back and forth. So there's no really main moves. We chop up and down. Then we have that final break, which would push the VIX up into the 29-30 area, and it will most likely have the put call ratio trading up to this area, and that's going to tell us it was a complete flush out, because this was the one. Even though we had the VIX that was trading, very high the last time, we didn't really see that with the put call ratio. So it was kind of we had panic with the VIX, but we didn't have it with the put call ratio. And typically, we don't see sustained rallies or big rallies hit until we see the retail public really throw in the towel. And we see that, that's when we're going to know we'd really want to start bringing out our shopping list and buying, quality high growth stocks, the quantum stocks that I like. So let's see what plays out on Monday. I'm going to be traveling tomorrow. I'm going to be leaving around 10 o'clock, or a little bit or even earlier than that. So I'll be back at my house probably around 2, but there's not going to be a whole lot of trading being done. So with that, enjoy the rest of your weekend, and I will talk to you guys in the morning.